Welcome to Market Making Strategies. My name is Doug Patel. I'm the founder and I'm the creator of this option strategy using prints. So let's just go right into it. Let me ask you a question. Are you one of the 90% of traders who are consistently seeing themselves overall fail and not find consistency in trading? The first question you should ask yourself is quite simply, why are so many traders failing? And a lot of times, yes, it does come down to psychology, comes down to habit, discipline, and so forth. But the reality is, are you truly using a strategy that gives you an edge? Because if you're using chart patterns and so forth, you are now using the same strategies that is available to everyone. So where is your edge? As you come in and you look further into this video, I will show you clear examples of in the 1 year of inception of this company, we have over 85% of the calls, in fact it's higher, where we have projected where the stock will go to based upon the prints and the buying and accumulation from smart money. What is smart money? Quite simply, the institutions who have the resources to control a stock movement for a certain period of time. Those are the people that we are following. We identify them in the tape. And once we identify them in the tape, we then start watching how they accumulate their positions. And then we base our strategy off the strategy that they're implementing. To keep it simple, we are a shadow, or we are riding shotgun with smart money. I myself, Doug Patel, have been a trader for now over 11 years. When I first started, my biggest concern was that statistic, that 90+% of traders overall will find failure. I ask myself, if it's that high, then I don't see where there's much of an opportunity for me to really excel unless I find out what is the edge. Is there a pattern, or is there a way that I can see the underlying, the movement underneath the charts? And so as I was researching and looking and seeing if there's a method where I could identify such things, I realized that is of being a tape reader. Tape readers is one of the hardest methods of trading because you have to really learn to read the tape. Over 11 years, all I have done is focus on smart money buying, focus on big prints, and built a data set over 11 years of studying those prints and seeing how the accumulation works, how long that accumulation will take to reach certain price targets, and literally studying all of the price movement and money flow. And what do I mean by price movement? Not simply looking at a chart or looking on your phone and seeing a stock went up 10 cents, 50 cents, or $1. I'm talking about the money flow. I'm talking about watching all of the buying and selling going on in the tape every minute, every day the market is open, so that I can identify exactly what smart money is doing once they are starting to build their position. And I have been able to a very high percentage, over 80%, identify exactly what they're doing and be very close in the positions and the price targets that they meet. So as we go in further, you will start seeing exactly how we trade. And I really hope you understand this and you guys see this and you're excited to learn a strategy that allows you to follow the people who move the markets. So come dive in with me and have a look. I did this masterclass, if you will, or this nice introduction to market making strategies, because I know there are multiple methods out there, and I am not here to discourage any method, because there are other ways and other methods to trade. But like I said, what could be better than identifying the institutions, or as we call them, the smart money, and the institutions being large hedge funds with billions and billions of dollars in resources, big banks, anyone who has the ability to play the ask and the bid, to control a stock with large resources, is called smart money. Why are they smart money? Because they are in control. They are the smart ones. So I just couldn't understand how there could be anything better personally than being able to identify them and shadow them and follow them. Because let's be honest, do you think institutions backed by billions and billions of dollars with lots of talent at their disposal within their offices and teams will truly fail? I don't think so. So in this portion, this is a start. So let's just have a quick conversation about what is market making strategies and how do we do it. So quite simply, we identify start of the market build through large executions hitting the tape. So as I was saying earlier, this is the portion where we identify all the smart money prints. So as we're looking at a stock and when it first opens, what we're basically looking for when we're watching the stock market in a particular stocks that we are watching is we are looking for those huge executions, which I will show you next. And those large executions is the start of a build from these institutions or smart money. Now, it could be one, it could be many. It depends how much volume, depends how much exposure, depends what they're doing. The beauty of being a tape reader is typically you are ahead of the market movement. You are ahead of any movement coming next. You are ahead of the chart. Why is that great? If we go back to the point that I made earlier, that smart money has lots of resources at their disposal, that means that they're going to have information and they're going to have a plan before us, retail, or the overall market knows that this movement is going to happen. A lot of the times, they are starting to build before the news even comes out. Before the stock even starts moving and gains momentum, they have already started to build their positions prior to that. This gives us an extreme edge. Because if they're building their positions and we can see they're building a very strong position and placing a lot of resources on the line, we can start putting our option strategy in play early before the price movement starts. Why is that important? I will talk about this more later on, but the beauty about this is that we pay a very low premium and are able to position our contracts 4 months or further out and be ready for when that stock triggers above the area of accumulation. So for instance, if they were buying between $3 and $5 for a couple of months and accumulating a foundational build, so the start of a stock movement, we call that foundational build. The options prices at that moment will not have changed or increased because technically the stock is not moving above 5. But because we are able to see what they're doing and identify them in the tape, identify what they're doing in the volume, we can now position ourselves for what price targets we can identify that buying can meet. So for instance, if they were buying between $3 and $5 and they accumulated millions and millions of shares, just the fact in itself that they were buying between $2, do you think they accumulated all of that to simply go up $1 or $2? The first price target could be our first psychological level of 10. Now, if you looked at options and options 4 months out at $2.50 a contract, which is what we call our sweet spot, a very proven strategy. For instance, you might find a strike price of $8 for less than $2.50 because the stock hasn't started moving. So once the stock moves, you're already go into an increase in the price of your premium just based on the fact that you were in there prior to the stock moving, prior to momentum. So we watch the type of build and identify strategy being used, long-term, mid-term, or short-term. So as we're watching all that foundational build, as we're watching them building, even in a strategic build above foundational build, we start identifying through all of the data points, the past 10, 11 years and more of me studying the prints and understanding what those prints that are accumulating, how long it could take, whether it's 4 months, 6 months, 8 months, or further out where I don't know. But that's the beauty of it. I've been sitting here for 11 years watching all of the smart money movement and have created this strategy based upon years and years of data. The finished product would never be this clean, would never have such a high percentage return as all my students are showing, unless I took 10 to 11 years to truly execute on a large amount of data, a large amount of screen time, and also watching how stocks move in different environments. The stock market is not consistent. It can have different environments, high volume, low volume, lots of different situations. So I wanted an all-weather strategy, and that is what I'm bringing to you. So then we manage a trade by watching the prints daily. We plan price targets as play develops, and we be smart about thresholds for taking profit. So once you identify what the first amount of build is, now we are just planning our price targets. And once that stock has now released above that first area of consolidation, we are quite simply watching how new buying comes into the stock, understanding if is that for the same price target, or can we establish a second and possibly third price target. And one thing you will always hear from me is that never ever concern yourself with the outcome or the money. Focus on the process. And one of the beauties, if you are absolutely focused on the process, is you will recognize that taking profit at the correct levels is smart trading. To be a consistent trader, you have to take profit. And if you aren't concerned about money, then taking off your position will not be hard. Typically, you will find that traders who hold their positions too long, at some point of the trade, their focus is on how much money they wish to make. Well, we know one thing, what we wish to make is not in our control. So if we execute on the discipline of following, we can execute on the discipline of taking profit correctly. So why waste time? This is actually how a layout could possibly be. And I'm going to quickly explain it to you, and I want to show you right now some of the call outs that we made and what we based it upon, and look how far they went in a short amount of time. So if you're looking at this right now, this is just a basic platform. This is your daily chart. So this shows every volume bar here is a daily volume bar. So for instance, in NVIDIA, amazingly, this day it traded 800 million shares. We can see on average, maybe around 300 to 400 million shares. So this is a daily. If we look over here, this is where you see prints. This is where you see the big buying and the big selling. And we have this filtered. So every print is over 1,000 shares. Now, the first one we're going to look at is NVIDIA. If you look over here, in April when the tariffs were announced, everything dropped down, as you can see right here in April. But under 100, between 90 and 95, the amount of accumulation in NVIDIA, which basically means there was millions and millions and millions of shares purchased, straight away gave us, without fail, $120 price target. But the reality was the amount of buying that was seen, even going up to 120, was more than enough for 150. Now, given the fact, like I said earlier, we can identify all of the buying accumulating in this moment here, when everything was dropping and everything was selling. If you couldn't retape, you're conditioned to believe that the market is going to drop, it's going to go down, it's going to be sold. But that is not what happened in NVIDIA in April 2025. All of the fears in the market were used by smart money to accumulate monstrous positions so that when they were ready, they could take it back under 100 and take it all the way here. And you can see, as of October, it's even hit 195. Well, the traders in our room, and I will show you some from our Discord community, we had positioned ourselves because the price was so low of options. For September and October, we were all at 165. Those who traded this as myself had 165 strike. And we got it at a relatively good price of 250. Now, why is that important? Because the second the stock started moving directionally towards its price targets, the premium of the contracts go up. So even though we're at 165, even in the first month, you were up quite a few 100%. Because as you know, you do get premium increase as the stock price goes up. And the quicker it goes up in the time frame that you are holding the contract, the more the premium of your contract will go up. Number two, IONQ, we looked in October, right here. We saw huge accumulation over here at $10. It was more than enough from the strategy that we created to get to 25. More than enough. And as it released, we kept seeing more and more buying. And again, because we were watching the prints and we're able to identify smart money under 10, we were able to position ourselves in different areas to take advantage of different price targets. Again, look where the stock ended up. We saw from 10 that it had enough buying for 50. Even in April, when everything came back down, it was nothing but accumulation, with the best accumulation we saw in the stock between 50 and 35 in this area. Nothing but build for 3 months. And we identified that this type of buying, based upon the movement of the stock, so keeping the stock in mind, and how much its ranges, how much it moves off certain prints, its area of build, we identified that a stock that is building between 35 and 55 has no less than a 75 target, which we achieved. As you can see, it started its actual move around the second week of September. And what's important to notice here is look at the volume when it's building and look at the volume when it's releasing from the build. So the relativity of volume that's needed to build and to release has to be equivalent. You can't have the same type of volume that's been used to build to release. The volume has to be 2 to 3 times higher. And as you can see, once it released, in a matter of weeks or a week, it had gone all the way from $45 to $75. Just that movement alone gave you hundreds of percent in premium, which we all achieved. Hundreds of percent in profit. Let's look at another one. Let's go to OKLO. This is one of the more even better that we took. And again, if you go back to October 2024, which was the inception of market making strategies, this was one of the first stocks that we started seeing huge accumulation. And something very interesting to point out here. There was absolutely no volume until October. And then all of a sudden, now you've got 20 million shares, when suddenly it was only trading 1 million or 1.5 million. Now you've got 20 million. This area of volume, new volume, was used to build. We identified that and identified that this type of accumulation, this stock had enough at that time to go to at least 25. When we started going to 18, 19, 20, all of this was nothing but accumulation. And our first target for this was 50, and we can see it went to 50 and beat 50. And it was nothing but buying and accumulating all the time, all the way through to middle of this summer 2025. And then we can see once they had done many months of accumulation, and we can see from $10 reaching price targets and accumulation of 50 and 60, where this was pretty much all buying, we can see that they were building for what they believed was a growth stock, a stock for the future. OKLO is into nuclear power plants, something that's going to be a huge part of our future. AI is going to require a lot of power. So we already identified that this was a need for the future. But really, it's not about news. It's not about what people tell you. You want to follow those that take the stock to where it wants to go, and that's smart money. So once you can identify that smart money is an agreement, or you are following smart money, there is nothing better, because they're the ones that take the stock to the price targets. And as we can see, over all these months of build, it ended up going as high as $190. Now, if you think about options, this was one of those that gave you well over 1,000% return. Let's moving along. It doesn't stop there. NVTS, what a beauty this one was. If we look at this in middle of May, look at the volume prior for all of it, all the way through before 2024. Also, we can see there was nothing going on in the stock, no volume. If we first want to know what volume is, think about a car. How far can a car move when there's no gas? Or petrol, as we say in England. Well, think about stocks as the same way. The stock is a car, but the volume is the petrol or gas that moves it. So out of nowhere, now you got 277 million shares that comes in this day. And throughout this period between May and October, if we're looking, this was a huge area of accumulation between 5 and 10. If you look at the volume, that is very low volume used to build, but still over 15 million shares a day. And as I told you earlier, the relative volume used to accumulate, and you have to calculate how long it's accumulating, is now you have to look at the subsequent volume that would be required in order to move a position of that size. And so hence, when we get closer to large volume breakouts, we know, and the buying and the alignment of market makers would now start aligning. This would be closer to your time frame, which I will teach you in the courses, of when to know how close you are to that release period of when the stock will now move away from this consolidation and towards its price target. Well, I can tell you, the building that we saw in this accumulation, we had a first price target of 15 and a second price target of 20. Well, in this movement alone, we've had huge buying at 10, 11, 12, 13, 14, 15, 16. With currently, as we are here today, there is humongous buying at 15 and 16. This stock has more than enough to get to 20 in the short term. But again, this is another huge growth stock that has the potential for a lot more. So this is where we would not only have our sweet spot trade of 4 months and paying no more than around $250 a contract, but this is where we do what we call stagger the ladder. And we have multiple points, 4 months, 6 months, 8 months, to take full advantage of the entire movement of this stock. Again, when you go on school.com, you join our courses, you get access to all of this information. And you would be able to know how to spot smart money, how to plan for smart money, and the different strategies that are enforced and used to then create the play for where they're going to meet their price targets, and the time frames of when to take options and when to manage your options. This is all spoken about and talked about by me in the courses. And every week I would do a live Wednesday webinar talking about current stocks we are looking at and answering any questions anyone has about their trading. Well, let's keep moving on. ACHR. This is one that I know everybody in the room absolutely loved, because for nearly 1 year, yes, nearly 1 year. Look here, October 2024. This is October 2025. If we look, we can identify that it's been building huge. And how do we know? One of the giveaways, look at the volume. The volume you can see is around about 10 million average. Then all of a sudden it goes to 40, 50, 60, 70. And I can tell you that throughout most of this, it's been acquiring. But if we look here in this area here, we can see the volume is now increasing slightly more. Well, I can tell you that this has still been huge acquiring for what is believed now that this is a huge growth stock, one for the future. So we all have shares, but at the same time, the option contracts in this type of build, given it's been sitting like this for a year between a range of 5 and 14, which you can still make great premium on your options. But if we really want to get in the money and through the strikes, we have to play this very long term. So all different strategies of options. DJT, let's go to another one. Well, we know what happened during here. This is last year, around October, November, when the new president's to be chosen. We saw huge buying in October, as you can see on the volume over here. This volume represented, as we know, as tape readers, nothing but buying. Lots and lots of buying. We identified price targets that were very short term, and this became an extremely good trade for us because we were watching buying below 20. So the great buying here was all the way from 10 to 20. And we identified that this was an easy play for a price target that we had initially had of around $30. And you can see it made a beautiful run all the way above 50. So it was huge bonus money. Again, hundreds of percent appreciation or return in your trade. So those are some examples of trades that we've already taken in market making strategies in the last year. And to be completely honest, over 90% of our trades called out have a minimum of 100% return at some point. Let's talk briefly then. What are options? Options, quite simply, is the instrument that you use to trade shares or trade a stock. And there's going to be far more details in the courses about options, how to trade options, how to put options on. but you are basically controlling the shares of somebody else at a fraction of the price, and I mean extreme fraction. So for instance, our sweet spot trade, where we have options that we control. So basically, we're able to control somebody else's shares for 4 months, and we don't pay more than about $250 a contract. So if you wanted to control 1,000 shares, that would be 10 contracts, the equivalent, because one contract is the equivalent of 100 shares. So if you wanted to control 1,000 shares of somebody's stock, you would need to do that in a way of purchasing 10 contracts. So for a 10 contract sweet spot trade, you're paying $2.50 a contract. So if we know that in a contract there's 100 shares, that means that for one contract you're paying $250. So for 10 contracts, that's $2,500. Now think about this. If you wanted to buy 1,000 shares of $100 stock, that would cost you $100,000. Now, if that stock went up $10, you would make 10%. But if you could control that same stock with $2,500, you could look forward to hundreds of percent return because how low your investment is and because of the way this strategy works, that we are ahead of the movement. So you are already in position at a cheap price with your options to take full advantage of that movement and gain a lot more premium than somebody who took the same position based off chart movement. Now they're paying far more money than you are, and so they get far less returns. So if we look at what's in front of us, this is just an example, and let's call this ABC ticker. On the left-hand side, that's the price point. So let's say this stock started somewhere around $7 or $8, as you can see in February. And let's say the strike price, so we purchased 4 months out, a strike price of $24, let's say. And that was within the $2.50 range. Now, let's say all the buying that we saw at 5, 6, 7, even 10 was more than enough to get to 30, let's say. But because we were so quick and because the stock hadn't started moving yet, we were able to purchase for $2.50 4 months out, our sweet spot trade, a strike price of $24. Well, what's the beauty of that? If we got this position, let's say in the end of February, that means we are now March, April, May, June. The middle of June is when our contract expires. So if everything up to $24, that goes to the shareholder, the person that's allowed you to control their shares. They take all profits up to $24. Everything above $24 is now yours, the option holder. So let's say you sell in May or June at $30. Well, 24 minus 30 gives you $6 profit for you, minus the $2.50 that you paid for the contract. You're now left with $3.50 profit. That's about over 150% return. But if you held it and it moved all the way to 35 or 36, so let's say we used 34 or $35. 24 away from 35 is 11. That gives you a gross of $11 minus your cost of $2.50. You'll now be at $8.50. So if you pay $2.50, you are well over 300% return in 4 months or less. Where else are you see those type of returns on your money and a high percentage trade? Okay, so now let's have a look at what do prints look like. He keeps talking about all of these smart money executions and all these prints on the tape. Well, this is exactly how it would look on your platform. And don't concern yourself, we have all of the workspaces and templates already created in our Discord community. It literally takes you 2 seconds to download and use them in your TradeStation platform, which is our preferred platform because we also have a lot of analytical tools that we built specifically for our TradeStation platform. So if we're looking at this now, if we're looking at the left, you can see that it says $70. That's the price at which they purchased. If we look in the middle, you see how many shares. Now remember, we filter these so that we take away the last two digits. So if we're looking at 27, just imagine this is 2,700, 1,000, 2,600, 1,000, 2,200. So if we look at this at $70 and how many shares were purchased, this next thing we need to make sure is the timestamp. And we can see it's all 56, the same execution. Now, in case you're wondering, why wouldn't it just be one print? Remember, in an order at $69.99 or $70, it could be multiple people who would like to sell their shares at that price. So it could be 1, 2, 5, 10, 15, 20. So when you go to execute or buy all of the shares in that order, you are basically taking shares from different accounts, not simply just one. But what we can see is in that one execution, the total smart money outlay was 1.589 million. In the second one, far larger as you can see, the smart money outlay was 3.6+ million. And in the last one, nearly $5 million. And if you look, 16,900, 9,600, 5,800. These are all large prints. This is how precise we are in our trading. We look at every print every minute. Now, don't fear. If you're saying to yourself, this will require me to be glued to the screen, you have your Discord community. And if it's a really great stock with a lot of smart money entrants, you can trust that there's multiple people. We all use the same strategy, sitting at the computer, observing prints, and we do cut and paste these type of prints in our threads. So it allows you to constantly stay up to date on the new buying and selling in a stock through your Discord community, which means you can still work your full-time job, own your businesses, do what you want, and you just need to pay attention. I would always tell you, use the Discord community, but most certainly you should have your own setup, whether it's at work, home, whatever it may be, so that you can also follow the prints daily of your stock. That's a discipline that you must have. So when we go back to this, you got to ask yourself, can anyone simply spend that in one purchase? Because the reality is, how many people have 1.589 million to execute and buy those shares? 3.6 million, 4.5. Very few people have resources that huge. So we know this can only be done by smart money. Okay, well, here we are. There's nothing better than watching the live build. This is a recording of live movement in the market. If we're looking here, just right now, you can see this is what you call huge prints. $9 is what they're buying. Look at the type and the size of the amount of buying. The timestamp is 8:58:09, so we can see this is one big execution. Now here's what's really interesting about this. If you're trading off charts and looking at indicators and have you, you're going to look at this and say it's completely selling off. Get out. It 10 massive volume came in, as we can see here. We need to get out. There's too much selling. But in reality, retail might be getting out of fear. But the ones who control the stock were taking their shares and building a larger position. And we've seen where ACHR is today, trading around $13, $14. All it's been doing is shaking shares and accumulating, taking all the retail fear and emotions and using that against them to build the largest position they can for a future move. So if we watch this and you look at the tape, you'll notice quickly there was no selling. Smart money was buying all of the shares and building a larger position. This is very important because this type of information allows you to get in on a trade so early when everybody's fearing that once it moves, remember, we are ahead of the movement, ahead of the charts. We know what it's look like next. That gives us the huge edge that nobody else does. We can read the prints, so we know what they are doing, which means we can start strategizing what price point they are take it to. To follow on from ACHR, when it was getting sold off or in the public view, if you just did it off the charts, now we can see what happens when it's going long. And if you look here, right there, look at that volume bar and look at how much it was, 552,000. And if we look here, yes, it's red, and that's a glitch that happens often in the market because of the way that the orders play. But one thing that is clear, and we can go back and look again, I want you to pay particular attention right there and watch on the ask to make sure that that order was executed on the ask, which means buying. We'll do this together. So if we're looking at that order here, does that execute when it comes to 10? And if it does, we know that it was buying. Hence, you must watch the order execute. There you go. As you saw, fully executed. Somebody purchased 500,000 shares at $10. That's only $5 million in investment. See, if this on a chart means nothing, but we know it meant everything to the stock. And if we go across to the daily, it just builds into this huge accumulation for the future. And this is where we start understanding what is it that they're intending to do? How long is their build? What are we creating for price targets? Well, I can tell you there's a minimum long-term target for all this buy of $50, but definitely 20. But we have to wait until the accumulation is over. Okay, so I want to show you exactly what a chart would look like to the average person. As we can see, this is about, it starts off in 2024, moves all the way down to the end of October 2025, which is where we currently are. If you looked at this chart, you can say, oh, this was brilliant. Palantir was sitting around that $10 to $25 range for a very long time. Now we're at 180. Well, I can tell you, if we're looking at this chart, that Palantir was in fact building, and we watched this do nothing but build. But it builded for a very long time, and we can see why it builded for a very long time, because in no time at all, it's already at 180. So the longer the build, the bigger the buying in that build, you can start seeing that this growth stock has a far higher price target trajectory. Now let's go back to that same chart, and now we're going to show you exactly what we saw and how we traded it. So during this whole period, as I told you, you had foundational build. Huge foundational build, and we knew this was looking for price targets well above 100, even when it was building at $10 and $20. This is what we call foundational build. You need to wait until foundational build is complete and it starts moving above the range of buying before you can take options. It does not mean for some of you that you cannot take shares if that's your preferred method, but the huge returns are in the options at the right time. Now what happens is it goes into what we call strategic build. Quick build and release to the next price target, because the main consumption of shares is in the foundational build, which is what they use for long term. This is more short term, mid term, for them to play a portion of their overall position. So shorter build time, and we call this catch and release. So as you can see, it builds here, and you can see the volume of build, small strategic build, and that didn't go more than a month. And if you look at that build alone, which was between 40 and 50, we knew it had a price target of 100, but definitely a short-term price target of 60, just based upon how its ranges. Well, if you did a sweet spot trade just off this build, and you went out 4 months, which would be somewhere here, look where the stock ended up, over 120. You would have made thousands of % return, as some people did, but you still had multiple opportunities. This was another area of build, and we saw it in the prints, not the chart. I'm telling you, this is the only reason we identify this is because the prints told us what was going on. Again, here was the release. Back down in builds, here's the release. This strategy works differently in different stocks, but I can tell you it repeats all the time, especially when you consider what percentage of the market is traded by algorithms. You know that once these algorithms are set with a formula, for the most part, they're going to reach their price targets, unless something huge happens that affects the entire stock market. But this is a very proven strategy that gives hundreds, if not thousands of % in return. sometimes within less than 4 months. So if you're looking at this right now in Palantir and we're moving on, so first we saw the chart of what everyone sees on a daily of how Palantir looks. Second, I showed you, as you can see on the left, exactly what smart money was doing when we identified the foundational build, strategic build. But on the right hand side, let's have a look at us showing the print. So if we look on July 9th, we see this huge buying at 140. We can see it's a lot of shares, and we can see the timestamp is the same. Well, let's have a look at something. When was this? This was July 9th at 140 this year. If we look at 140 on the chart, look where that is in July. That buying said 150 on its own. Again, look what happens afterwards. If we go back again to that same Discord, let's look at more. 169, 167, 174, 176. We can look at all the buying. It's already telling you what it's going to do. And if you remember from one of my earlier ones that we spoke about in IONQ, OKLO, we have those prints from all the way back. You could go all the way back and look at this. You can see we have all of these prints. And look at these prices, 47, 40, 37.50. If you look at May 19th of this year in OKLO, 37.50, 38. Look at all the accumulation here. 40, 39, 47, 48. Now you can see it's accumulating within a certain range. 48, 49, 49, 50, 49, 49, 40. You can see huge. 51. And as we saw earlier, where's OKLO today? Nearly $180 where it was going to go. And look at the prints. 58, 59, 60. And this is all for OKLO. And look at the dates. So if we go down, we can see June 12th, 62, 55.50, 58. We have all the prints here, and we can prove and show you we knew where the stock was going far before it made its move there, because we are forever following smart money. And we can see that we have loads, and this is just a portion of the stocks that we are following. If you look today, NVTS, which I told you, this is October 17th, 2025. Look at the buying at 15. Look at the buying at 16.50. Now, if we just go and start this all off, let's say from October 15th. Today's date is October 18th. This was last week. We can see one of our students, Bragg, has shown huge buying at 14. As you can see, look at that's 15,000 shares just there. 33,300 shares just there. This is a huge position. But let's keep going. Why stop there? 14, 15. Look at the amount of buying of 15. Where we've already calculated, and we've said earlier and we're saying again, there's a price target of 20. But where is NVTS right now? Around about 15-ish. It's still building a position. 14.50 says between 14 and 15. Now this was buying, although it came up red. 15. Look at the size of these positions. This was at 2:59:21 p.m. Eastern Time. All on the same day. 2:59:21 again. 15 at 3:03 Eastern Time. Now, again, all in black at 16 was all buy. And you can see, saw it execute the order on the ask. We do not post it unless we physically saw it execute the order. Again, that order's seen as red, but it wasn't. It was buying. And if we go here, 16, again, more huge buying. They're accumulating a big position between 14 and 16. I'm telling you on October 18th, there's a first price target for that of 20 and a future price target of 25 plus, because they are in, this is all still foundational build for what they believe is a high prospective growth stock. And so you can see that we have all of the prints copy and pasted in threads in our Discord community. And if you look at the time frames of when these prints come, so if you look at these October 14th to the 17th, you can see we are well ahead. But these prints we've been pasting since, let's have a look, when we first started in this particular stock. May 29, 2025, we started watching this at $7. And look at the size of the buying. 37,600, 47,300 bought at 7, 51,000, 8,400. And remember, this was bought in one execution, millions of shares. If we go down to here, look at 7 again. Look at the size of this buying. Again, remember, that's the price where the order was. This is how many shares they purchased within the order, which is usually everything in that order. Multiple people in that $7 order. And the key is to make sure the timestamp is the same. So it's 9:32:02. So this is just examples of us watching, pasting, and following the buying, strategizing our positions, placing our options, and being far ahead of when that stock finally starts making its move. And now retail catches wind of it on all of their radar screens, and now you get FOMO, now you pay too much, now your emotions come in. Not when you come to market making strategies, because we're sitting back and watching our profits increase as everybody else's FOMO increases, and all they're really doing is helping move the stock further along for our positions. Now, it would not be me and it would not be market making strategies if we don't talk about the most important part about trading, which I want to add even in this masterclass, as it is a huge foundational aspect of our trading. And that is the psychology behind trading. One of the biggest issues or concerns that I always have seen is where all the time they're requiring that psychology means in order for you to be a successful trader that you need to change who you are. The reality is we do not need to change who we are as people in our daily lives, but we need to enter a performance mindset when we are trading. So if we look at the trader performance, learning to perform, not to be. We don't need to live as the performer, we just learn to perform. So it's not who you are, it's not your past, it's not your emotions, it's not your background, and it's not your expectations. Nothing emotional, nothing outcome driven, but what it is discipline and repetition, focus and consistency, process over outcome, learning under pressure, controlled execution. Performance is trained, not inherited. We teach you to perform, to be high impact performers, so that you're focused on the process, not focused on the outcome, and you're not fearing that you cannot change who you are. We don't need to do that. You identify as who you are on the outside, but when you come to trade or when you're in front of your screens, you are now in performance mode. My method is about creating mindset and skill set that pass the market's test. Going into what I was talking about in regards to the performance mindset and psychology, when you master that, and as we will teach you through the courses, teach you for the weeklies, and by the way, we have a great therapist who's highly trained in stock psychology who will be doing a bi-weekly webinar to tackle all the psychological issues that students face, and that's all included in your monthly program. So if we look at the market making strategies and we look at the first target, when you are looking in a full position, when you get to your first price target, if you haven't been disciplined to process, very quickly you start trading through your outcome. So trading through how much profit you want. And you forget the fact that you have no control over where the stock goes. So that means you have no control over the amount of profit you can make. So when you have a performance mindset and you're disciplined, you will have no issue in understanding that it's very important that you take profits off the table, take chips off the table. I always say this, and I'm going to say this here. We all have responsibilities. We are all accountable to something. There are expenses that need to be paid and people that need to be taken care of underneath us. So what is your expenses and what is your accountability or your responsibility? That is what it is. That always comes first before anything else. Remember, your entire position should never ever run all the way. So if you took the entire move with your entire position, you are too exposed. You got to be a smart, disciplined trader in order to find consistency. That does not mean that you are sitting there getting all the profit but you do want to make sure that you manage your trade. So even if 10% of your position made it to the end, that was a great trade that you can repeat all the time and find success in. So now that you've got a nice introduction into the masterclass, I've explained to you what options are, why options work in our strategy, because we're so ahead of the move, what tape reading is, how tape reading looks, how we can identify and see the prints in a live market, and how that looks on a daily once it goes into its momentum. Now ask yourself, after just watching quite a small snippet, is a method that you're currently seeing going to give you that type of access? What access is better than being able to identify the people that move the stock? Remember, if news comes out and out of FOMO you jump into a stock that's moving huge, you should first be asking yourself, why is it moving before I found out? Why is it that always the stock is already on its way when I find out from news or from blogs or what have you, or forums? Wouldn't you like to be known or be able to see prior to the movement? Wouldn't you like to be a shadow, or as they say, a fly on the wall, when smart money is slowly going about building their positions? They don't talk about it. It's not loud. They won't email you. They don't televise what they're doing, but they cannot hide it, because just as you go to a restaurant and you see that bill of all the items that you have either eaten or you have drank, and now there's a price to pay, in the same respect, any buying and selling, whether it's one share or a million shares in the stock market, has to be printed on the tape. The tape, you can look at it as saying the receipt. That is what the tape is. So ask yourself, really ask yourself, because in my belief system, the reason that nearly over 90% of traders overall are failing is because they're subjecting themselves to the only information that's provided to them, which is what has already happened, the chart. When you look at a stock chart, that has happened. And anything that has happened was controlled by smart money. So it kind of makes sense that they know what you are looking at, because they're the ones that perform everything you see. So what edge can you have when they're showing you exactly what they want to show you? Wouldn't you like to see or know what they're going to do next? The only way you're truly going to know that and know how long and what time frame that's going to happen in, meaning in the next movement, is you've got to be able to see them, see the prints, see the work that they're doing. And if you have interest in that and you've liked what you have seen today and you want to join my students who are making hundreds, if not thousands of % return, and you'll see in the Discord community, you will see examples of it like I showed you earlier, then come join school.com. Come join our community of high-level traders, high-level learners. This is not only your gateway into providing you a skill set that can give you extra income and help you, help your family, the people that you care about, but what we have truly found, and what I've found, and is important to me, and a huge part of our company, is that through smart trading and discipline and habits, and all the psychology sessions that we do, we want to see you improve your life. We want to see you improve every aspect and area of what you do to make you a more balanced individual that's more susceptible to consistency and success. So please, come check us out. Come have a look. For $127, you're getting full access to my courses, full access to a weekly live webinar by me on the stocks that we're talking about, future movement, any questions, a bi-weekly psychology session from a top therapist in stocks. You have a community of great students who all support and help each other. I alone am a full-time trader. I am always in the market, and I'm always speaking about positions, my positions. We work as a team that works to help each other so we can all grow together. So if you've interest, I would love for you to come and join our team, join our group, so that you yourself can see how beneficial this can be to you, your future, and also the people that you love and care about.